All right. If you guys were not paying attention yesterday, we got a huge report that might affect you guys. 818,000 fewer jobs were created than what was initially reported. And for some of us that don't understand how this all affects us if we're buying a house, you might want to start considering making some decisions a lot quicker than you thought. Let me introduce myself. I'm Jose Mejia, real estate agent in the Tampa Bay area in Florida. I got my man Tony over here from One Real Mortgage. What's up, Tony? How's it going, man?
Hey, nothing much, Jose. Doing well, man.
Can you start off and just kind of let us know, like, what does this news mean? Like, there's so many things that drive interest rates. What does it mean to someone who may not understand this stuff?
Definitely. And you're absolutely right. I mean, it's so tough to ignore. It's all over the place. Social media, the news, people talking about it. I got my clients talking to me about it every single day. The job report basically it's an indication of, how many new jobs were created the month before, what's the rating of unemployment, and of course the wage hikes in some corporations and businesses as well. So for the average person that's reading this really means almost nothing, right? Until you tie it up to what's happening in the industry today. But that indication that you just mentioned today, where the job reports came in at $818,000 less than the expected number, that is a super weak indication of the job reports, which really is a good thing for us, right? When the job reports is weak, that kind of tends to move rates in the lower direction, which again is just great for everyone all around. But it's not really just the job reports. You also have to look at like the economy, right? I mean, the economy as a whole right now, it's cooling off. Inflation is decreasing by the day almost, and that's just causing rates to drop. And it's something that we're seeing real time here at work. Like, I can give you more technical examples. I have a client right now that he put himself under contract with a realtor in, like, I believe it was the middle of July, closing September 20th. Right. So you got about 60 days. And sure enough, we started the loan at a 6.625. Yesterday, we're discussing a 5.75% interest rate.
Wow. That's crazy.
Yeah, no, it's huge, man. And I'm having these conversations with a lot of my clients, and I'm so happy and lucky to have some of the tools that they could use to take advantage, which we could talk about later. But all in, man, rates, I haven't seen rates this low since, I would say, May or April of 2023.
That's crazy, man. And I appreciate you sharing that because, in the past 3 weeks, I've been sending reports to some of my clients and people who kind of been just, taking their time, which they should. And the mortgage rates have kind of gone down. And then, I think it was late last week, it went up a little bit, but, definitely a lot better than what it's been almost in the past year. Right. So, but now we get this news from yesterday with these reports, and I don't think anybody really expected it. I mean, there could have been some people that made the assumptions, but they weren't too sure themselves. But now that this is almost kind of like definitive, this means that people who might have been on the fence, kind of waiting for the elections to happen, not knowing if it was smart for them financially to make a move. And even people like you mentioned, people who are actually going through the process of getting pre-approved and looking for a house and have that motivation to go find a house. And then there's another group of people who are actually under contract. All these people now are going to kind of level up a whole nother gear and try to decide what's their situation and what can they do to take advantage of a possible mortgage rate drop, which I would imagine might even happen today.
Yeah, no, for sure. So, and you categorize, three types, right? Which is someone getting pre-approved, someone on the fence, and then someone under contract. And they're all affected in different ways, right? Like, I always tell people that there's no perfect time to buy a home, right? I've seen this in the past where, for example, let's say there's a meeting tomorrow and they say, hey, we're going to drop rates more. On the mortgage side, sometimes we get a reprice for the higher for like a week or two. Like, rates just actually get a little bit worse. And the reason is because a lot of times when the Feds say, hey, we're dropping the rates, a lot of times the rates have already dropped and the pricing has built into the drop has been built into the new pricing a week or two prior, right? So, for someone that's on the fence of, like, should I wait? Should I not wait? We all know that the longer you wait and the rates keep just dropping, the more it's going to be competitive when you start, looking for a house. So getting pre-approved now and looking for a house at the right time is any time really, because you could be discussing a 6.8% with someone at pre-approval. Rates are dropping while they're looking for a house. Now they're at a 6.1 or 6.2 or whatnot, right? And then for the clients that are under contract, right? I was talking about some tools that we have here, because you could imagine if I had right now 15 loans in process since last month, rates drop. And could you imagine me losing all these clients, or the client saying, hey, I want to relock, and I'm a broker, so I have access to 20 different lenders, and I can go ahead and break their locks and relock, but that's just more work for me, more work for ops.
Right. Yep.
It could just be a snowball of a lot of things going on. But we have something that called a float down, right? And a float down is a magical tool that will allow a client with a locked interest rate to float down the rate with the same lender. So someone locked into a 7%, and today we understand that the rates are at a 6. I can offer that client a float down. I can drop the rate from a 7 to a 6 without restarting the loan all over again, without having to cancel and relock and transfer everything all over again. So that's been very useful. We've been exercising, myself and a bunch of brokers here at One Real Mortgage. We've been exercising the float down because it does make sense, right? So that's really my take on it, man.
Basically, to conclude all this, if you guys are under contract, you need to go back to your lender and try to figure out what your options are to possibly lock into a lower rate should you see it moving that direction. It might be a little too late depending on where you're at in the process, and it might end up being more work for the lender unless they have that special feature that Tony was talking about, which is a what do you call it? A float down option, right?
That's right. Yeah, float down.
All right. Yeah. So wherever you're at, the savings can be huge. And if I'm not mistaken, I think like a 1% interest rate drop in mortgage rates is about $200 a month. Mm-hmm. And then, a 0.5 is $100 a month, right? And you're just talking about the monthly payment. So the lifetime of interest savings is significant. I mean, in the thousands, right? So long story short, wherever you're at in this journey, we want you to know that what's happening right now could mean that you could be saving huge. And if you are under contract, I hope you get the opportunity to talk to your professional, whoever is helping you, and revisit all your numbers to see if you can lock into something that might save you huge. So again, guys, this is Jose Mejia in the Tampa Bay area. Make sure you keep an eye out and see what other updates we have. Tony, appreciate it, man. Thanks for coming in at the last second.
Yeah, no, you got it, brother. Thank you so much for having me. Always a pleasure, and looking forward to doing this again.
All right. Thanks, man. See you later, guys.